Yeah, for sure. A lot of first-time homebuyers believe that you need 20% down in order to buy a home. That's just sort of the conventional wisdom, and the reality is that's not true. In my entire career, I have worked with exactly one first-time homebuyer that actually had 20% down. And I work with first-time homebuyers all the time. Right? So most important thing to know about first-time homebuyer loans is they solve the down payment problem that most first-time homebuyers have. So first-time homebuyers, instead of having to bring in 20% down or 10% down, first-time homebuyer loans typically are going to start at like 5% down, 3.5% down, 3% down, 1% down, or even 0 down, right? I'd say there's about 3 different loans that are typical for a first-time homebuyer. The first is a conventional loan. A conventional loan will usually have a down payment of either 5% down or 3% down. The main thing to know about a conventional loan is that if you're going underneath 20% down, which obviously 5 or 3% down are less than that, you're gonna be paying something called mortgage insurance. And mortgage insurance is it's a way for the lender to have a little bit of extra protection because you're not bringing as much money into the game. So whenever someone getting a loan is bringing in a large down payment, that makes that loan safe for the lender to make that loan, right? And so if you're bringing in a smaller down payment, it makes that loan riskier for the lender. And so what happens to sort of fill in that risk gap, you might call it, is you take out a monthly insurance policy that is essentially protecting the lender against the worst case scenario, which is a default. And so because you're sort of taking out this insurance policy to no longer see this loan as risky, and so they can then give you the loan for a lower down payment. A conventional loan at 5 or 3% is gonna have mortgage insurance, and the amount of mortgage insurance that you have is highly dependent on your credit score. So if you've got a high credit score, something maybe 700 or above, oftentimes a conventional loan is gonna end up being the best solution for you. Now, if your credit score is maybe a little bit lower, say it's more like in the mid-range, in the 600s, for instance, in that situation, you might be looking at an FHA loan. So this is the second kind of loan, an FHA loan. FHA is great. So FHA is actually backed by the US government, and FHA loans have 3.5% as their down payment, and you're able to go all the way down to a 580 credit score and still only have a 3.5% down payment. The other thing that's so great about FHA loans is typically the interest rate is a little bit lower than a conventional loan. Mortgage insurance is capped at 0.55%, which, that probably doesn't mean much to you, but it's actually a lot lower than most mortgage insurance is for those conventional loans. So FHA, in my opinion, is maybe the best first-time homebuyer loan program there is. The last one is USDA. So the number 3 loan that I like for first-time homebuyers, USDA. USDA is great because USDA has options that go down to 0%. USDA is the United States Department of Agriculture. So these are going to be loans that you can get on homes in only rural areas. We can talk more about what areas nearby are rural areas. Here in Kapolei, nearby Eva Beach, all up the Waianae coast, all those areas are considered rural areas. And so you can get USDA loans here. What's difficult about them, they do have lower interest rates, but the amount that you qualify for, so based on your income, you're going to qualify for a lower amount with a USDA loan than you would with an FHA or a conventional loan. So if you come to me with a certain amount of income, you're going to qualify for a little bit less with a conventional loan, and you're going to qualify for even less with a USDA loan. And so part of what we'll do when we're working out which loan works best for you is we'll kind of crunch all of your numbers. We'll let you look at side by side. Here's what a conventional loan would look like. Here's what an FHA loan would look like. Here's what a USDA loan would look like. And then you will be able to decide which one of these options makes the most sense for you. Thanks for watching. If you enjoyed this video, please give it a thumbs up and consider subscribing to the channel for more great mortgage content. Also, make sure to hit the notification bell so you'll never miss an update. I love hearing your thoughts, so drop a comment below and let me know what you think or if you have any questions. You can also follow me on Instagram at @TheSteveMarks, where you can get more behind the scenes content and updates. Until next time, stay awesome, and I'll see you in the next video.